Crypto Hotep here with another investing video. We are on week 74 of the Family Portfolio and Dividends Tracker. Now, if it's your first time watching the video, feel free to go to my channel, go to week number 1, and that's where you'll get a full breakdown of the thoughts, the premise behind these weekly updates. Basically, I gave my family a short list of stocks to choose from for my research. They picked the ones that most resonated with them, and then we proceeded to use M1 Finance as our broker of choice, because with M1 Finance you can have one big portfolio and then have sub portfolios in it. And then we're just basically charting and documenting our investment journey. Every week we go through the balance, we go through any dividend activity, markets, market news, how we're feeling about the markets, and just overall, as I mentioned, just documenting that whole investment journey with me and my family. If these videos are helpful for you guys, please comment, subscribe, share. It helps the algorithm, and it also helps share this video amongst other people, like-minded individuals like yourself. But by no means is this financial advice. Please do your due diligence and research stocks and crypto before you do any type of investing. With that being said, guys, before we jump into week 74, let's go to week 73. Week 73 saw us cracking the $3,000 balance at $3,023.09. We had with a total market gain of $196.15. Dividends earned of $18.91. So, and that had us arrive at a 9.66% year-to-date money-weighted rate of return. Not bad at all. So let's go to week 74 here and see where we're at. So week 74 currently has us at a balance of $3,061.76 with a money-weighted rate of return of 11.22%. We're in the double digits now year-to-date. Dividends earned of now $20.80 with a market gain of $230.67. Whoa, okay, so we're just carrying on here. And this chart here is a thing of beauty here. This is a thing of beauty. So year to date, look how far we've come, right? So December 31st, 2024, we had a little bit over $1,600 in this account. Fast forward to September, we've cracked over $3,000. It's simply crazy what just consistent investing, consistent contributing in your taxable brokerage account can do for you. Let's go to the activity. Let's see what's going on here. So we did have some dividend activity between last week and this week. So our dividend activity consisted of dividends paid by Visa, 15 cents, Pfizer, 69 cents, and then Target, 75 cents. Okay. Now again, if you're your first time watching a video and you're saying Crypto Hotep, that's that's all good and everything, but those are only cents. Those are cents on the dollar, literally. That's correct. But as a reminder, we built this, or we are building this account as a small account. When we first started these videos at week number 1, we had I believe our total balance was around $300. So again, when you want to be invested into dividend stocks and you want to take the dividend route in terms of investing, those dividends do look small when you're starting to build this snowball up. But the key point is to continuously get those dividends and also increase your shares in the companies that are paying those dividends. So essentially that will increase those dividend payouts. It's literally a snowball effect. The more shares you get, the bigger the dividend payout is, and then you reinvest those dividends back into that same company. So the biggest thing is just consistently getting those dividend payouts. So with that amount that we had, we did buy a little Costco and we bought some Starbucks there. And again, as I always say, you don't have to buy the whole company. Technology now, especially with M1 Finance, you can buy fractional shares, which means you can buy a little piece of that company with whatever money you have lying around, which is good. Okay, so that's the only activity that we've had. Let's look and go from bottom to top with our portfolios as we always do. You know, the biggest moves we saw last week was my wife's portfolio, which shot her up to number 3, and that brought down our middle child stocks, where they're at the bottom currently. But I will say this: the entire family is in the green right now, which hasn't happened in months. So this is our middle stock. Our middle stock has a balance of $372.24 with a money weighted rate of return year to date of 4.46%. Market gain of $8.76, dividends earned of $2.58. So something to keep note here. Even though our middle is at the bottom, I will say this: there's some encouraging sites. Amazon is boosting currently. Costco is still doing what it normally does. Target is the culprit, down year to date over 25%. That'll bring down anybody's portfolio here. I believe we're starting to see a little bit of turnaround with Target, but right now I don't want to do anything dramatic in terms of that holding. We're still going to be holding some Target, okay? Google just boosted in everybody's portfolio, in my family's portfolio that owns Google. You'll see that shortly. Google this week got a fantastic ruling from the judge, just basically telling them that they didn't have to sell off Chrome, which was fantastic. So not only was that good for Google, it was also good for Apple as well. So you'll see that shortly when we go over the other family members and their stock. So Google up over 62% year to date with Google. Starbucks down about 4.5%, and then Sony has been constantly keeping in that mid 20s percentile in terms of money weighted rate of return. And then Tesla, we are starting to see a little green. I see the light. We're closing the gap on Tesla, down over 3.5%. Okay. All in all, still a very good portfolio for my standard. With our middle, I have nothing to change as of right now. Let's go to our youngest. Our youngest has a balance of $477.73. Money weighted rate of return year to date of 8.9%. Dividends earned of $1.56 with a market gain of $23.64. As I mentioned, Apple now is in the green. We have been bleeding Apple for the past several months now. But as I mentioned, as long as Apple held that $200 level, that great psychological level, $200, I believe we had more upside with Apple, which we do. So as you can see, money weighted rate of return in Apple is now over 6.5%. Tesla, again, closing the gap on Tesla. We're not there yet, but down less than 4%. Sony, again, same premise as with our middle, up over 30% on Sony, up over 6% on Costco, and then down over 3.5% on Starbucks. Let's go to my wife. So my wife's portfolio is the star jewel of the family portfolio. Why? Well, her balance is $414.28 with a money weighted rate of return of 46.93%. Dividends earned of $1.30, market gain of over $96.46 there. The green stays greening in my wife's account. This is just tremendous. And this is what I mean. So Tesla, my wife bought Tesla at a lower basis, at a lower cost basis. So she's currently up over 3.5%, where our youngest and middle are down over 3.5%. So as I said before, with our youngest and our middle, it's only going to take a little bit of time for us to close Tesla for them so they can see some green. Google, as I mentioned, up over 46% on Google. You can't make this up. Pepsi up over 7%, and then the anchor of the portfolio, Celsius, up over a whopping 147%. Money weighted rate of return year to date. Just fantastic. And remember, guys, I said this 2 weeks ago. I said if my wife's portfolio gets all in the green, because we were looking at Tesla and we were really closing that gap, I said if Tesla starts to run, watch out, because my wife's portfolio is just going to keep going. And that's what it's doing. I mean, look at this. At the beginning of the year, $117.40. Right now, $414.28. That's something to behold, I'll tell you that. Okay, let's go to our oldest. Our oldest finally cracked $900. Let's go. So our oldest has a balance of $902.83. Love to see it. Our oldest is finally in the green. Now, if you've been following the channel, our oldest has been in the red for several months now. It's been a long climb back up, but we're there. You know, even though it's only 1%, we see the light and it's getting green here. So up over 1.16%. Dividends earned of $4.72 with a market gain of $4.21. So again, this is why you invest into good companies, because you can just put money in them and let the market do what it does. So as we talked about, Apple, turnaround in Apple, now in the green, over 1.68%. McDonald's has been carrying the portfolio, and we just keep getting better gains, up over 12% year to date with McDonald's. Costco, you're not stopping the machine. Costco also reported today on sales for the quarter, and big surprise, they blew the numbers out of the water. Costco is always going to Costco. So up over 2.94% year to date. And then Tesla. Yes, we're down 10%, but the cost basis that our oldest bought at was significantly higher than everybody else. So right now, that may look like a big number to some. I feel pretty good about that we're closing that gap even further. So feel very good with our oldest finally cracking $900 in their stocks, up over 1%. Love to see it finally in the green. It's a good week. And then last but not least, mine. I'm very impressed with my portfolio. Up, my balance is $964.68. I did crack 15% money weighted rate of return year to date. Dividends earned $10.64 with a market gain of $97.60. Every sector in my portfolio is in the green. Big surprise here, technology is up the most. As you know, technology, it just has Microsoft and Google in there. And with Google's fantastic ruling this week, and just great news in hitting an all-time high this week, is just carrying the portfolio. It's crazy to see here. Finance, we have finance up over 2% here. We have Visa, Moody's doing what they do normally. Not really mad at that at all. Real estate, this is O. O is doing its thing here. And then industrials and energy, we have waste management and Cintas. We are down money weighted rate of return year to date, but collectively, because remember, we switched different positions, the money weighted rate of return is still positive 5.96%. Right. Pharmaceutical, we have AbbVie currently. AbbVie money weighted rate of return over 23%. AbbVie is doing its thing. I think that was a fantastic move by myself to consolidate our previous pharmaceutical companies. We had J&J, and we had Pfizer, and I elected to go with AbbVie instead. It seemed like AbbVie had a little bit more upside. I still kept my dividend with AbbVie, so all in all, pretty good choice, I believe. And then consumer and staples, we just have Lowe's. Consumer staples and shopping, I should say, we have Lowe's and we have Costco. Again, Costco doing its thing. It's really hard to stop Costco. It doesn't matter if we're in a recession or not. Costco is still gonna just continuously carry on. Just a great company here. Overall, just great portfolio gains by my choice of stocks here. And for the week 74, we are at a balance of $3,061.76 for a money weighted rate of return of 11.22%. Dividends earned of $20.80 with a market gain of $230.67. If these videos were helpful, guys, please feel free to like, subscribe, comment. Let me know what you think. Share it. And as always, guys, thank you and happy investing.